Hello, Warriors. How's everyone doing today? Everyone doing all right? Hi, Didier. Kevin, how are you? Alexander. Forex Gal, I'm okay. Oh, thank you, Arena. Sinatra, Hugo, everyone. Some interesting action here on the Dixie. Right here, held 61.8. It's really got to dig its heels in. Hello, Hugo. A lot of people will uh, if we close under 90, are going to be pretty bearish at dollars. So even if this was a high up here, everyone see it up here. I'd be careful being short Dixie right now. Okay, because we could rally, get some type of retracement here. So you look at it on the 15-minute, really came off 61.8 like a bullet. So be careful about that if you're a bear. S&Ps are trading in little dots when you look at, like 2 hour, 4 hour charts. Actually, it didn't blow out the 4 hour divergence. Remember last week when we were in this triangle? I thought that we would break out. It happened on Friday. Okay, so if this is a fifth wave out of a wave four triangle, it should be close to terminating in here. It didn't confirm on the 4 hour. It didn't take out this high. It tried to, it could, but it hasn't, Amira, on that. Okay. Um, I know it's a little late, but this rally to $28 silver is firmly being rejected. Gold just got killed. And a lot of that has to do with yields. Okay. But yields look a little bit overdone. And with that, the yen is acting like it wants to make a new high. It's a delayed reaction, but looks like it wants to here. We'll see. Euro outperforming cable for the first time, but maybe this isn't irregular and there still will be a break to buy. So I'd be careful about shorts in the dollar. Look at Aussie tried to make it to new highs, and I think it missed by high was 05 by about 15 pips. Yeah, high 78.20. And it didn't make a new high, so you can't call it a divergence because it didn't make a new high. But definitely struggled to do it, although it was buoyant here. I'd be careful. Okay, the confirmed low in the 4 hour. Okay, let me take a look. You're talking about this down here? Yeah. Anyway, I'd be careful regardless. So if you're calling this a confirmed low, right? That's a little mentoring for free for you because I know you like that for free. So if you think this was confirmed, was this confirmed? It may have been confirmed here. Okay. So we no longer have a confirmed low. We actually have a divergent low. It doesn't show up as well on this as it may like off something shorter term, but actually shorter term, it didn't diverge. 1 hour did. Okay. So S&Ps, this could be the week for a reversal week. Remember last week, besides a triangle, we had, I was talking about Friday was supposedly going to be an exhaustion time to mark signal. So maybe it's stretched an extra day or so. Of course, we have to do a lot more damage. The off number, coincidentally, is 39.20, I believe, for the week. Just check it out. So it's this high right here. Oh, 38.91, which is interesting because 38.91 happens to be back down here on this formation. Okay, 38.90. And for super bears, that just, I call this bear porn. Look at this red speed line and the 200-day intersecting all the way down here. So just something to think about, which everyone thinks would be impossible for it to correct back down towards 35, 3,400. One step at a time, one day at a time, we'll see. So actually selling off a little bit here. We'd need to close back under 39.40, I believe, to have a 2-day reversal in S&Ps, but it's probably my highest conviction trade right now. Okay. And if that's going to happen, we should at least get a bounce in the dollar. Oil up against some pretty significant bear porn. Yeah. BEAR. Not the kind you watch on your computer. How are you, brother? So this has really been a tremendous move in yields. When you think about it, they've almost tripled, right? From 0.4 to 124 is a tripling of rates over the summer. And I have to think that that has something to do that's going to have something to do with valuations. I mean, you can't value the market the same way with a 10-year at 50 bips as you can at 125. So we'll see. And that's about it. I mean, the one significant hit so far today, log it, variables. They still do variables. I don't know. So, back here I was talking about 130, 150, based upon some longer term stuff, the weeklies. Here was the previous low before the big meltdown. So that comes in around 144. But short term, it might be close over. Look at that. Right. So we'll see. Okay. And I'm going to bring Blake in here and see what he has to say about the euro and everything else he's watching. Cable finally looks like it's, could be succumbing. It's got some.
Hey, good morning, Dale.
Hey, how are you, buddy?
Oh,
A little
doing
bit of
fine. Just
divergence in cable here. Yeah,
what's that?
just a little bit of divergence in cable here. Everyone's waiting for a break to buy it. I tried to sell it a few times, and here we are. I think some of our work by our Elliotician and stuff said we could get up towards this 139 level and to be watching it, but you need to see it take out 137 to get bearish. So,
Yeah, and I tweeted that out this morning regarding the sterling. We completed the AB equals CD. If you guys
okay,
use Forex
nice.
Analytics, you already knew that this was setting up, days ago. I mean, we've
Right,
been talking about the bull flag pattern. Well,
right.
go back to yesterday. Um, you know, you go back to the previous chart. I'm sorry, that we'll have to go back to yesterday here. This is the daily chart from last night. We were targeting up here, and now we completed it. So now that it's here and it's coming off, I mean, we should find some support down here. This is and I can grab this right here. This will be 138. If you guys recall, this 138.50 level, and it's going to be pretty big on the way back down. I don't think I'd be shorting the sterling, but you got to be looking at it as, a possible long up there. And then the big breakout point was really 137.50. It could slip down there. I mean, and I guess it depends where the dollar goes, because if you look at the dollar, Dale,
Yeah,
the dollar actually is holding the 618 retracement.
right. I brought that up. Yeah, it came
Yeah,
off
I
like
mean,
a rocket.
this is a big deal, and I think it's bearish while we're below here, but we could risk a little bit of a squeeze since we've held the 618. We've actually held the shoulder of the inverted head and shoulder pattern, so it's not negated yet. It's close to it, but it isn't yet. And I mean, what if we get a little bit of a bounce here? I mean, it's possible. I think a lot of people are bearish the dollar,
Oh yeah,
because of the move that we've seen in equities. So people have been really leaning on the dollar, as stocks have come down or gone up, excuse me. But how about if that, those flows reverse a little bit? If we see equity markets come down, it is Tuesday, right, Dale?
it is Tuesday.
It is
Yeah.
turnaround Tuesday, and the markets are kind of enjoying a big move. One of the things that I mentioned to our traders yesterday, and this was during the daily roundup, and it's what's happened is interesting, because here we are, exactly where I thought we'd be, but we actually dipped a little further than I thought in the dollar. And what I told everybody, I guess we can just start. We'll just go here with the dollar index. If you were on the daily roundup, I said, okay, here is, let's see here. Here is the gap, right? Here's the gap for the dollar, weekend gap. And I said, it's interesting, we have a holiday, a lot of times in the dollar, or whatever asset you're looking at. We have a weekend holiday. You'll see the dollar move, and then we'll eventually come back and fill that gap to the where we started the weekend. In this case, we dipped a little bit further, and we're trying to go ahead and fill that weekend gap already. That happens quite a bit. It's like when you don't have a lot of participants, or not the full participation of the market starts to move, and then will reassert itself to the opening price. Excuse me. And so I think that's what we're doing right now. Will the dollar continue higher? I think all of that really has more to do with what happens with equities at this stage in the game. But also, one of the things that I wanted to mention really quick before I turn it over to Stelios and Steve, is Bitcoin. I mean, Bitcoin just ripped to 50,000. I think a lot of people were so excited about Bitcoin at 50,000, but one of the things that we've been monitoring is this, ascending channel. So, and this is also 161% extension of the last move lower too. So keep that in mind, guys, especially if you haven't been following the Bitcoin, analysis here. If you take the move from, all of January, right? This is an hourly. So let's go over to a 4-hour. This is the move lower in January. We're at 161% extension. Relative strength is very divergent, so it's not following price, which doesn't mean that it can't go higher. It just means that you have to be really careful buying it. So, you can see the rallies are kind of getting stuffed. You're seeing sellers come in. Relative strength is diverging. So if I was going to play Bitcoin from here as a trader, I would just be buying support. I'd buy support down here at 46, 500, somewhere around here. I'd rather be a buyer down here than trying to chase it up at 50,000. 50,000 is going to be a big number. It's a psychological number. It's a round number. Everybody's looking at it, so there's bound to be a lot of sellers around here. It should probably break. If it's going to continue higher, it's going to break through the 50,000 on its way to 100,000, but it's going to need a couple of tries going through here, in my opinion, because it's a big level. So, if you want to be playing Bitcoin to the long side, try buying dips instead of buying into these rallies, especially when relative strength is diverging like it is. So anyway, just some food for thought there. I want to bring in Stelios and Steve here just momentarily, but I want to also point out really quick, as the cable continues to move higher, the Aussie is kind of struggling. So just keep that in mind, that this is more of I think a little bit of a warning sign that we're seeing these commodity currencies not participate fully to they're not participating as well with all this dollar weakness that we're seeing. So, and I think a lot of the dollar weakness that we've seen really is, come through the sterling, which, we talked about on the week ahead video. But now that the sterling might be pulling back a little bit, what happens to all the other dollar pairs that really couldn't move much? So anyway, just some things to think about. So Steve, Stelios, you guys are in winter wonderland over there, and while you guys are coming in, Steve and Stelios, I gotta show everybody what it looks like in your neck of the woods.
Go for it.
Yeah, this is just see if I can pull up a picture here. This is Greece. What the heck?
This is the biggest snowfall I've seen in my life in Athens, and I'm 49, almost 50.
Global warming.
There you go.
That is not, well, hey, don't joke about that, because where I live, this summer will probably be, 122. So I think it's just more extremes, right?
Exactly. Global warming has made things more extreme. But I mean, we haven't had such a snowfall since 2004. That doesn't mean anything. I mean, every many years you get like a few days. This is the warmest winter I remember in my life. So far, with the exception of the snow we have now, which is expected to last like 2 to 3 days maximum, and then we're going back to like spring weather. We haven't had, in essence, winter more than 5 days during the whole winter. So it's the hottest. I mean, we might be having now snow like for 2-3 days, but it's going to be the warmest winter I remember in history. So
yeah, I was going to say, just because as you guys are listening in at home, I work with Stelios and Steve and the rest of the Forex Analytics team, and he has been showing us pictures of them at the beach.
Yeah,
even maybe
even during Christmas, actually, we were spending
Christmas, at the beach, even though it's, you guys might be in jeans and sweatshirts, but still, that's pretty warm. So so I know it's just more erratic, this weather. Anyway, so hopefully your kids are having a good time with this.
They are.
All right. So what do you guys make of the price action? The markets come back, excuse me, we're back. The U.S. is back in the saddle during North American session. We're seeing a big reversal in the dollar index today. And I'm going to point out something in just a second, but you can see the dollar index, really big, hourly candles here. We're not too far from taking out resistance or the highs of the session, which would be around 90.40. But the one thing that's on my mind today is yields.
Yeah.
Now, I don't know if you guys have seen this, but if you
talked about it.
Oh,
Yeah.
You did talk about it.
But go ahead. I want to hear your take on it.
Yeah. Well, first of all, we've got the 10-year yields. We got real yields really rallying here, and you can see we've broken out this, bullish wedge pattern, held support. We're breaking out, and we're testing 161% extension of the really last big move lower. But in essence, the 38% retracement really comes in around 145. And I've been really more of a advocate of the market's not going to care a whole lot about this, rally in yields until we reach about 1.5% in the 10-year, which will be that previous support should act as current resistance. That's where the market's going to start to care a little bit more. What do you guys think here?
Well, personally, I think yields are something very important. We saw in 2018, late 17? Yeah, when they caused like a little
Taper
downtrend.
tantrum.
Yeah, exactly. And when yields go up, it's going to be danger for risk assets. I personally think inflation is coming. It's actually funny because a guy, a very well-known guy at Bloomberg, wrote a piece about inflation this morning and said, oh, there's all these people who are saying we have inflation, but really we don't, because look, there are items which are running at above average inflation and items which are running at below. So, what are you talking about? It's all good. And I'm like, and he actually posted the chart of individual items and what inflation they had. And on the top side, you had, all the things you don't need, like, healthcare, education, food, energy, housing. And then on the bottom side, the really negative ones was, TVs and computers and this. So he goes, oh, it's okay. Some things are above, some things are below. I'm like, are you serious? Are you serious?
Worst case scenario, if you get cancer, you'll buy a new television.
Yeah, exactly. So I think inflation is coming. I think inflation is already quite a bit higher than reported. And it's something that you cannot avoid when monetary supply is being pumped and increased at such a level, at such an unprecedented rate. You're going to have that. And you see, obviously, asset price inflation come through first, and then you're going to see it come through in CPI, etc.
The big difference now, Stelio, is that productivity is seriously going down due to COVID, but disposable income has not really gone down. So, there are still a lot of people that get money that they can spend from the government, etc., while they've completely stopped contributing in producing stuff and adding to the pie of goods.
Yeah.
So that will immediately actually spike inflation in everyday products.
Yeah.
And if you notice, the trade deficit has also like exploded higher, which makes sense. And there are a lot of people that are like saying stupid things like, yeah, okay, trade deficit is going down because we have COVID. I mean, like, COVID is a US phenomenon, not a global one. You know what I mean?
Yeah, good point.
I mean, COVID would be an amazing excuse if it affected one side of the world and not
yeah.
the whole world. If, let's say, US had COVID and China didn't, or let's say if US had COVID and the rest of the world didn't, then you could, seriously say that, obviously we need more imports currently because people are not working to produce locally stuff. But COVID has affected the whole planet, and still the US deficit is the one that gets worse and worse.
Yeah.
And for those that don't understand it, deficits are absolutely a zero-sum game. If you are running a trade deficit, somebody's running a trade surplus against you. As simple as that.
Correct. Forex Gal actually says there's no inflation. It's just the cost of living that's rising. That's a good one. Very good.
Well, hey guys, I'm going to go freshen up my coffee, and then I'm going to get ready for the.
I thought you would say something like, I'm going to powder my nose, or.
No, I'm going to get ready for the next phase webinar with we do our bias chart analysis, and we basically build our support and resistance levels for the day. So that'll be for the Forex Analytics subscribers. But before I go, I need to mention that, guys, if you haven't picked up Stelios's new book, Truth and LIBOR, make sure you pick it up. I'm going to put it in the chat box for everybody. So you guys pick up your copy. It's about $10. I mean, come on, help a brother out, especially if you listen to him every day. You've got to hear his story on what happened with LIBOR. Maybe he'll talk about it a little bit later, but I know I don't want to take away any more time for the guests that are coming, and Steve and Stelios. So you guys have a great one. I'll catch you if you're a Forex Analytics subscriber. I'll see you in about 45 minutes. And remember, if you want to try to get Forex Analytics for free, visit our Forex sponsored page, and you can open a Pepperstone Securities account. Click that link right there. If you open a live trading account, you can get up to 2 to even 4 months free of Forex Analytics. So we'll see you there. All right. Thanks, everybody.
Have a good one, Blake.
And just so you guys know, Dale is going to have me as a guest next week on Friday, and I'm going to talk about the book and everything. So it should be fun.
Yeah.
It'll be fun to get people to actually.
It's definitely
that'll be
a very
awesome.
interesting story.
Yeah, and people, it's funny. and sad, but funny when you realize what's happening behind the scenes in these, with banks and regulators and all that. It's scary. Anyway, it is what it is. So
You
we
came
talked.
out a better man for it.
Well, I have to admit, I was lucky. I've raised my kids myself, and I've,
Yeah.
I'm lucky. I'm lucky. Let's put it that way. I couldn't be happier. So we talked about yields a little bit. We talked about Bitcoin. Yeah, 50,000, 100. Same thing. Risk assets not doing much. The dollar. I mean, the dollar. Blake talked about the dollar, but it's not doing that much today. Like 0.1, 0.2% down, up. I don't see any big changes
Me too.
in the big picture.
I
Oil is
don't see
something.
anything to write home about, Stelio, and especially if somebody is referring, um, to the yields as a driver, which of course they are, although not nominal yields.
Yeah.
You talked about inflation expectations. University of Michigan shows that inflation expectations among citizens are the highest they've been in 6 years, by the way, which means that even
Because they buy groceries.
even simple citizens that don't necessarily understand much economics are expecting that inflation is going to spike higher than they've expected it to do during the past 6 years. So even if we talk about nominal yields, look at where nominal yields are in comparison to the lows, right? And let's compare that to the DXY. I mean, DXY is doing a lot worse than yields are doing in their effort to rebound, right?
Yep.
It's what I've said a long time ago that listen, there's going to be periods of corrective moves in the dollar. At some point, there will definitely even be some kind of a sharp squeeze to get rid of gathered up positions in the short side of this market. But I don't see any fundamental reason why rebounds are not selling opportunities.
Selling opportunities, yes.
I really don't see why they aren't. I mean, I no matter how I twist it, and many of you know me. I mean, Dale has called me a cynic multiple times. I mean, I don't have bias due to my personal beliefs because I'm always trying to see all the arguments in the market before I actually develop a bias. And there are many times that I have a position and I'll say that listen, I'm, for example, short or long that, but it doesn't look good at the moment, and technically speaking, blah blah blah. So fundamentally speaking, I really don't see any argument that makes any type of sense for a long-term, long dollar bias. So my bias remains short. So every rally, I think it's a selling opportunity, as simple as that. And even today, what we've done so far is, if we're talking about the DXY, is pare back earlier losses and be still slightly negative. I mean, don't look at the color of the candle because it actually gapped, right? So in comparison to yesterday's close, we're still slightly negative. Now, the same thing, I don't want to be a broken record, but the same thing applies to indices. They remain very well bid. Clearly, you shouldn't be chasing up here. It's plainly stupid to chase up here, right? For obvious reasons. I mean, where is your stop loss? Where is your risk reward? But that doesn't mean that the trend reverses just because it's overdone. Just because there is no risk reward to be buying here doesn't mean that you should be selling until proven otherwise. Now, this chart of copper, as you see, looks eerily similar to the sorry, it's on a different tab, to the S&P and specifically the Nasdaq. Look at the Nasdaq, right? And look at copper. And look at copper again. So yeah, I mean, we're approaching resistance, and we might see some type of reaction. But that's all like we might, or whatever. By the way, U.S. New York Fed manufacturing came in a lot better than expected.
Steve, let's. I think we have Dale is our guest here today.
Yes, Gary
Okay.
Kaltbaum is here,
Ah,
and
okay.
Great.
yeah, and Gary, I'm familiar with with him. I've seen him all over financial media throughout my career. So, first
Great.
time
Perfect.
interviewing face for Gary.
Okay, great. And we
Okay.
can continue this on phase 2.0, Steve, in 45 minutes.
Absolutely. By the way, something interesting. Before I pass it over, look at the daily candlestick so far in the cable. And it's not that it's a gravestone doji at the moment. Just look at the place we're getting that once again. So, I remain cautious in the cable. That's my last comment. Okay. See you, those of you that are members of Forex Analytics. See you in 45 minutes. Enjoy the interview, Dale.
Thank you, Steve. Gary, I just asked you to unmute, and I want to welcome you to our community.
Thanks for having me. It's quite the honor.
It's great to have you, Gary. I mean, like I was saying earlier, I know you've been on Fox a lot. I think, I'm kind of an old guy. Used to be on CNBC as well. You're a veteran. You've been around for a long time. Do you want to share your screen? Are you going to be showing anything during our conversation today? It's a little green box that says share screen.
Is it there?
There it is. Okay,
Excellent.
yeah, semiconductors. So Gary, before we get to the markets, although you're a veteran that's been around for a while, everyone's younger than me. Can you tell us, a little bit about the beginning of your journey into the business, how it happened for you?
Well, I started it. I started in. Can you hear me?
Yeah.
Okay. I started in the business with penny stocks, selling blind pools, and little did I know, many years later, that it would be the biggest business on Wall Street with these blind pool SPACs. We'll talk about that in a few minutes.
Okay.
In about 1990, I met William O'Neill and David Ryan at a seminar in Boca Raton, Florida.
IBD.
You got it. And I was converted immediately. Then I started reading up about Stan Weinstein and added some of his stuff. And then through arduous testing and trading and investing and failures and successes and continued failures and successes, we've come up with what we would call a pretty good thesis to how markets work, support and resistance areas. And I'm amazed that, this MarketSmith that I'm showing you the charts, I can go back to the first day the market ever traded when there were no computers, and fear and greed back then traces out the same patterns as fear and greed right now, even though we trade billions of shares, we got algorithms and coins and you name it. It's just absolutely amazing to watch and see. And when I go back to 1905, the fear and greed patterns are pretty much the same in bull and bear markets.
Yeah, Jesse Livermore said that the name of the stocks may change, but human emotion doesn't. And that's why the markets are always the same. So
yeah, and
great point.
With this Bitcoin thing, I'll show you one chart in a little bit, but the GBTC, which is the touched the 50-day moving average within 20 cents recently, and boom, right off of it. And I'll get into it. The 50-day average is really the mainstay of everything I do based on its success throughout.
Let me ask you this, Gary. After the COVID crash, I was looking for a retracement, but I didn't imagine what ended up happening. I couldn't imagine it back then. I thought maybe 61.8 back from the crash or something like that. So you talk about human emotions, fear and greed. To me, it sure seems like we're in, the greed cycle. And isn't the greed cycle getting a little bit longer in the tooth, a little bit long in the tooth here?
Well, 6 months ago, based on the actions of Jay Powell and the European Central Bank,
Yeah.
I stated emphatically, I thought there was a very good chance of now getting a climactic melt up in the market. I put it in writing on TV, radio, everywhere I go. And I also stated, if that was correct, expect some massive froth and speculation in what I don't know, but we'll see it, akin to 1999. And this was based on the fact that, I don't know if your audience knows it, between just the European Central Bank and here, they're printing right now, this second, $250 billion a month. Bernanke's biggest month was 85 billion, and the market soared on that. Lo and behold, many years later, late in the move, and that's where you get this type of activity. And my greatest worry is it's going to be right. And if I'm right on this, we're going to get a climactic move in the indices now, and that'll be the end. And then look out as the biggest one-sided trade of all time gets unwound. And I must tell you, we just saw like the quickest one-sided trade ever in GameStop and those short squeezes. And look how much they dropped. Imagine the biggest one-sided trade that's been building up for years now based on all this money printing and what that can be. But that would be about 5 hours of my yapping to explain all that. But yeah, you're seeing it in droves and companies with no sales. These SPACs that I believe a lot of, not all, are just absolute money grabs. It reminds me of 99 when mutual funds changed their name from technology fund to internet fund, and companies added .com to their name just to move their stock. So all these SPACs are merging with one note: electric vehicles and batteries. And I asked myself, how are 300 to 400 startups going to be able to make electric vehicles and batteries? They're not. It's a money grab. And I said on my radio show that, and I listen, I believe this, we're going to have 80 to 100% drops in a lot of these SPACs when the market turns. And I mean 100%. There's nothing there on a lot of these things. Now, the good news is there are some, I'm watching some names that merge with real companies, thank God. But the lion's share of it just scares the living willies out of me. And all one has to do is do the due diligence on these companies. And it's almost a comedy act if it's not going to be so sorrowful when all's said and done.
Let me get back to just a couple of the legacy markets. Junk bonds, which you know what they are, Gary. I mean, you're a holistic guy. You look at everything. Are making record low yields right now.
Yeah.
And while that's happening, if you look at things like TLT, I'm sure you follow it. Yes. TLT is almost back to the levels where, you mentioned where the Fed came in big time after the COVID crash. What do you make out of that anomaly? Just because are people gravitating to junk just because of the chase for yield? Because it certainly isn't the chase for quality. For
Absolutely.
that spread to be happening the way it is.
Economics 101 is simple. It says the more debt you have, the more you need to pay out the lenders to accommodate for all that debt. The worse debt you have, the even more you have to pay out. Instead, the opposites happen. And so these junk bonds, the most debt ever with yields the lowest ever. And this is because of what the central bank's done. And this is part of what I worry about in the end. The great unwind of the market, excuse the phrase, shooting back the middle finger at all these moves that central banks are doing. And just so you know, I follow them very closely. I write about them all the time. I would have never, ever thought that we'd get to 20 to 25 trillion of printed money. I would have never thought we'd have negative rates going even more negative. And I would have never thought just the US and Europe, 250 billion a month, they're going to print 3 trillion this year and telling us they're going to do it for infinitum. I would have been surprised if the market didn't do what we did here. But there's going to be heck to pay. Austria came out with a 100-year bond yielding
Yeah.
0.8. This is all part of what I consider to be the gargantuan long-term problem of a select few people around the globe creating unimaginable amounts of money to force markets up, and guess what? Now we're in the greed cycle. And I have to tell you, one of the culprits, Bullard, one of the Fed heads, is out this morning saying, "I don't see any bubbles." It's amazing.
Yeah.
It is amazing that somebody would say that after this GameStop just happened, which, by the way, is an outcome of all this. You don't see that in normal markets. So again, I worry about late stage. But look, right now we're in a climactic run. I've been saying I wouldn't be surprised to see the NASDAQ 17 to 20,000 this year, believe it or not. And I don't talk like that.
Yeah. Okay. So, it's not hyperbolic. So with that statement, you feel there's both price and time left in this market. I know a lot of super bulls, they're talking like 4,600, which, doesn't seem that far away when you're knocking at the door at 4,000 S&Ps, thinking that this bull could last another year or two. Do you think that we bought enough time for a couple of years to muddle through this?
I don't know about time.
Yeah. Okay.
To me, we're seeing a lot of climactic moves individually and sector-wise right now. And just so you know, in '99, the climactic move did not include the Dow or the S&P. You can see that they were crumbling way before the NASDAQ topped out in March of 2000. So I'm not sure. All I can tell you, I'm a big believer in the interpretation of markets today. We're in a bull market. The semiconductors I follow judiciously because they have led up and down for decades. I think 95% of the time they have been in the lead. I put up the SOX first because you can see here how strong it is. And we can talk the fundamentals and shortages, but I care about price first and foremost.
I noticed you put up the relative strength, and that's Bill. I first learned about, buy the relative strength leaders, and you could do it even in currencies on anything.
Oh yeah.
Yeah. So you identify what the relative strength is, and you buy those on weakness, and you also identify the relative weakness, right, Gary? So that you could short them on strength.
Absolutely. Look, there's two lines. It's easiest to isolate strength when the market's weak, and it's easiest to isolate weakness when the market's strong. So right now, it is very easy to isolate where weakness is. I have to tell you, though, there's not a lot of weakness. I think we're in record territory, just by my measurements, about how many stocks in the market are trading in what we call uptrends above the 50-day moving average. I don't think I've ever seen it like this in decades on how many things, which is a great thing because there's profits to make, but it's a negative thing because when it turns, there's a lot of things that'll turn. But right now, I'm seeing nothing in the way of trouble this second. The worst thing I can say is the sentiment remains off the charts too bullish. The speculation and froth has, gone into the stratosphere at this point. Those are the negatives. The positive is the price. Price is indicating higher, notwithstanding normal pullbacks, which, by the way, we just had one a couple of weeks ago, and the financials held the 50-day almost to the penny. The oil held the 50-day almost to the penny. The Bitcoin held the 50-day almost to the penny.
Okay, so you have a great line in the sand then. So if this recent move held the 50, say, for example, like you're an RIA, right, Gary?
Yes.
Okay, so say hypothetically, I'm a new client. I could say, Gary, I have 100K cash to invest. What would you do now? Would you tell me to just stay in cash and wait for these pullbacks to deploy? What would you be telling a prospective client with where the market's at today?
Well, I always get scared crapless when we go straight up for a few days, but that's just the near term. All I can tell you is I'll just put up some things. Here's, let's see if this is working. CrowdStrike is breaking out a range right here. I can show you Peloton held the 50-day perfectly on Friday and looks like it's going to set up. I have to mention Tesla again. Look what it did on Friday. It undercut a little bit and held.
Yeah.
So let's hope it puts in a flag. I think if Tesla puts in a flag, it's going to go into the thousands. So as long as I'm finding names, I'm good to go. I can tell you on our service, we just put out Rio right off the 50-day, and I hear it's up $5 today because we think commodities are in play. The same goes for BHP here, right off the 50-day. We did that about a week ago. So as long as there's things that are showing up on the screen, we're going to go with it. So it's not a matter of the market per se, even though it's overbought. There are new things showing up in here that we can play. I noticed like an ATI steel, a break above 1930 here. Nice flat potential breakout to go this way. And again, the commodities are acting pretty well. Why? The dollar's sinking like a stone for the last year, and everything coming out of the Fed indicates probably a continued weaker dollar notwithstanding, and that helps commodities.
It helps everything, doesn't it? I mean, in 2008, the first 30% rally from March of 2009 was mainly nominal gains. The dollar dropped 30%. The market rallied 30%. So, a weaker dollar is a tailwind is what you're saying for everything.
Yeah, and here's like the OIH. I'm showing the ETF. So held the 50 here. Now looks set up to move out. The big oil, the XLE, is going to move out to the upside here. So there's your oils also. Again, I'm not finding much. When I do my scans, I do it without bias. Because I'm looking at markets throughout the day, I can tell. I already know what's going on after the close. But when I scan, it's no bias. I don't even look at the name. I already know what the stock is. I can't find anything that I would really love to short. And that tells me a lot about the market. And there's weakness out there, but weakness gets bought also. And the market.
What is the weakness? Is it still value?
Say that again?
What is the weakness? Is it still value that's a weakness? Or are you a believer that value has turned against growth and will start to keep up with its performance?
Well, I can tell you, beginning of November, when they announced the first vaccine, it turned, and everything that was dead in value woke up. So you're getting much better play. I can tell you here. Here's the airlines, JETS. I'm not a Jets fan, by the way. I'm a Giants fan. But that's going to break out to the upside too here. So there's just another area. So I'm continuing to see all this stuff, and some names already moved above range in the airline. So again, it is a plentiful market right here, notwithstanding pullbacks. I'm just frothing at the mouth to find things I want to short. And I can tell you, like, here's one that stands out, AYX. It's in that software that's dead money, gap down on earnings here. But I'm not going to short anything right now because it probably goes up 20 points in the next 2 weeks because that's the market you're in. But when it turns, we're going to have a field day. Why? Because one of the aspects that's going on, margin has just skyrocketed. I don't have a chart on margin here, but that's what it did here in the last 3-4 months. So that's your.
So people are levered up.
Oh my goodness, that's your $100,000 guy levered up to 200,000.
Right.
And by the way, a lot of that happened in GameStop recently. I'm now hearing stories of people that bought near the highs on margin, and that's why I think Robinhood had to shut that thing down. I heard some people that put $100,000 and now have $3,000. So. Buyer beware, as they say.
Are you a believer that these chat rooms like Reddit are really a force in the market? Because I bet you were trained like me to think that retail is always late to the party, and they liquidate when things, look the worst. The market always looks the worst at the bottom, the best at the top. And now in this new era, um, uh, these social networks seem to be able to flex their muscles. Are you a believer in that, or you think that's just a cover story for hedge
Uh,
funds doing whatever they want to do and then pinning it on a chat room?
I think that's late inning action. Simple as that.
Okay.
I don't.
What inning are we in, Gary? A seventh
I,
inning stretch here?
I think we may be in the ninth.
Okay. The
And
ninth.
I
So
and
you
I and I say that because just
go ahead.
you don't get this. That's Tilray.
Yeah.
That type of move right there.
Yeah.
That just that's FUTU, and this one has fundamentals. These type of moves, and I'm not saying they're not going higher. Yeah, and then one of the big things that's going on right now, just so you know, this is MarketSmith. It used to be the Daily Graphs. And what's in there, they have this thing called the Printed Product Index. It's about 1,700, 1,800 stocks. And what usually shows up are relative strength, the great companies. All I can tell you in the last month, 50-cent stocks are showing up in droves that are going to $3. $2 stocks going to $6. And as I look at all of them, 90% of them don't have sales. And what that reminds me of is late inning froth and speculation. So I think there's just a lot of that going on here. Maybe we're in the eighth and there's more to go. I just think, I said it 6 months ago that I thought we were going to get it. I think we're in the midst of it. And I've been going back to 99 and studying it like a madman. I have to tell you, a lot of these moves have blown away 1999. And it's just so surprising because you never think you're going to get that again. But with the SPACs and people buying at any price, even with companies not even in there, with the penny stock move, with the leverage.
Yeah, everything.
I don't know if you know this, there's been 500 secondary offerings by companies in the last 4 months. Wow. IPOs that are coming out at just ridiculous valuations. And they're able to because the market itself and the greed have made it the norm. I just think this is all adding up, and I'm playing it and I'm buying things and I'm invested. But when we get that climactic move, I'll be ready, and because I think it's going to be swift to the downside.
You don't do time, but do you do price? You have any price levels in mind for, say, the S&P, where it might, are you looking like honestly, you brought up NASDAQ? 20,000, 18 to 20,000. What's that? 5,000 S&P?
Yeah, honestly, I don't have a price or time just yet. But what I do is, I'm constantly going back. This is the NASDAQ back in, back in 2000, and I keep paying attention to that. Here's the SOX back in 2000. I pay attention to that, and you can just see how you got this and then you got this.
Right.
We're seeing a lot of that, right? We're seeing a ton of that in individual names. If we get that in the NASDAQ, time's up.
Okay. The difference between this time zone that you're showing is that it was mainly just equities and NASDAQ. Now it's commodities. Now it's crypto. Now it's everything bubble. It's different than the big difference, isn't it?
And that's worrisome.
Okay, so Gary, Gary, I've done 1,000 of these. Okay, these interviews, and I can always tell when I talk to somebody if they have a grasp on what's going on. And I'm so glad I reached out to you. For people that are listening live or see the video later, what's the best way they could continue to follow your work? I know you have a radio show.
Yeah.
You want to give people contact information or show your website would be fine at this time?
The easiest is GaryK.com. And you can just email me through there. We have a big email service, and we do 2 one-hour webcasts each week showing you exactly what we're showing. And we cover everything. And I never thought I'd have to cover coins. But here's your Bitcoin, by the way, to the penny, right
bought
here
it at
on
5.
This day.
Hey, Gary, what do you think of this trade? I bought it at 5 and got out at 8.
I've done that plenty of times. Don't sweat it.
It
You know,
was
if
almost
I
a
go
double.
back on all my trades and never sold, I'd be Buffett right now. So
You know, I'm always out to. I make the tough money. I get out, and then the windfalls happen.
yeah.
Anyway,
and by the way, I know I sit here and talk about what I worry about, but right now you are in a. Notwithstanding, we can get a rug pull for a couple of weeks at any time right now.
I'm looking
but
for that from this week. I'm looking for, you know, maybe 3,500 in the S&P.
Yeah, I think you can get one. I just, if you're not bullish here based on what I'm seeing, you're missing. So I'm buying anything that breaks out with stops as usual. The commodities look, the commodities look like they're maybe early stage.
Yeah,
So-
especially the grains.
I mean,
You can't eat gold, you know.
I was looking. By the way, gold is. I'm thinking that maybe Bitcoin is replacing gold this second. I think gold will have its day again. But I have a sneaking. I would have thought gold would have been up another $2,000-3,000 right now based on the dollar. So I mean that may be the coins. I don't know. But everything else looks in gear, right? Just about everything else except IBM also.
Well, it was really great to meet you. And you know what happens when you survive an interview with me, and I know you're a pro. You go both ways on a microphone. You're by microphone sexual. You could go either way. You become my trading warrior, brother, because we go through the same battles every day. So
my goodness gracious.
Yeah.
By the way, just one last note.
Go ahead.
The best thing everybody can do right now is make a list of stuff that ain't working. Those will be your best short opportunities when this ends. Like IBM is like one of the tops for me here. I think that thing goes under 100. If of course, if nothing changes. Again, when things are so strong, isolate the weakness, and I'm going to be ready for the short side when I think it's time. So just a little word of note there.
Great interview, Gary. I'd like to ask you to come back maybe in the spring. We'll see, maybe May, and see what's happening with this euphoria, see if anything has come around to pop it. So I appreciate you giving us your time, because, you know, that's your most valuable currency is, you know, money comes and goes, time is gone forever. Thanks for spending some of your time with us today.
Please ask again. Thanks for doing this.
All right, everyone, Gary Kaltbaum, and that's a wrap for Turnaround Tuesday. Remember, don't just count your pips, count your blessings, and we'll see you all tomorrow. You're very welcome. Thanks again, Gary.
You got it. Take care. Have a great day.
Adios.